Welcome to the Synergy. I'm excited to be here again. Um, so yes, yet another opportunity to be able to delve into matters. And at the Synergy, what we'll bring to you is the insurance people and finances. And in these sessions, we'll be looking at different messages, different questions that you're asking, and also just responding to some of the things that come out of a consultation, just to be able to answer some of your burning questions. And obviously, we want to be able to help you at Emergence Financial Services to help you to put the right protections in place for your family. So, yeah, happy Children's Day. Today, I don't know where you're going to be watching this, but if you're watching this live, it's Children's Day today. And I was just thinking about things. So, over the weekend, over the last week, it was our 21st wedding anniversary celebration. And so I went off to Dubai with my husband. It was really a lovely time. But when we were going to take off, I was just thinking, right, so my first baby is going to be 21. I've got an 18-year-old and I've got a 14-year-old. And just thinking about it, both myself and my husband are going on the plane. I know things have been happening lately where, you know, there was hard landing, of one of the I think Iranian president, and is gone, and things are really happening these days. And so life itself is a risk. You never know. Our prayer and our thoughts, our positive thoughts, is every single day we are here to see our children, to see our children's children, to do the right thing, to go about our business, enjoy our life, make that income, provide a safety net for our children, being there. Well, the question is, if we're not there to provide the financial support that they require, then what's going to happen? So I was just thinking about it, that what if we went on to Dubai and we never landed? Now, see, people may be thinking, oh, this is like doom. No, it's not doom. It's just financial plan. All right. So I just called my son, and that's why I'm going to be talking today about the five things that you could use life insurance for to support your family, especially your children, because we're talking about children today. How can you use life insurance to protect your children, to protect our children? I call my first son and make sure that, okay, you can remember again how to access our life insurance, right? So my husband's got his, I've got mine, and they're all in trust, all right? So they're already named in it. Because I've got two adult sons now, we didn't need any extra trustees as outside our children, because we now have two of them that can be both trustees and also be beneficiaries. So my first son was the first one that was trusted. Now we're adding my second son to be a trustee, but all of them are beneficiaries. So I called him, spoke to him, and said, you know what, this is where they check out, this is what the password for to access our life insurance. And so what I'm going to be talking about right now is, what are the 5 ways that you can use life insurance to provide a safety net for your children? And even if you don't have children, what about people that depend on you financially? So the number one thing, what does life insurance do? It provides an income replacement. Remember that any day that you're going to work, after the end of the month, or maybe you get paid weekly or per month, you get paid and then you can pay your bills from there. So the question I'm asking you is, so you've got children, what if you are not around? What if you passed away before you retire? What's going to be, where is the income going to come from for your children? So life insurance provides an income replacement. And what it does is provides a lump sum. And there's also another insurance that's called family income benefit, that instead of providing a big lump sum, can actually provide them a monthly salary up to the time that your youngest is about 25 years, which we believe they should be financially fully independent of you. And the second one is provides an education support. So it's like an education funding. So I was just thinking, when we were looking at the amount to put together for our children, we looked at our youngest, right? So if anything happens to us now and she still needs to go to uni, and my first son is always, his second year, first year in university and is work trade, how much? So those are some of the ways you can calculate what the sort of protection that you need. So if I'm not here financially, and I'm with my husband, anything happens to both of us together because we're traveling together, what's going financially, what's going to happen to them. So we have enough money for them to be able to continue their education. So you have to look at that aspect also. What would your children need if you are not here? Financially, how will they finish their education? Because that's one of the biggest legacy you can leave to your children, to make sure that they have the right education. Remember that if you do pass away and your children are still below 18, it's challenging because now they are going to be looking for a guardian. That's why it's good for you to look at the wills also. Okay, who's going to be the guardian for them, right? So my first son I've made to be guardian because it's going to be 21 soon. So, and we've talked about this. This is always a family. We talk about the family, how we're together. If you're not here, you are the head, things like that. You have to have this conversation with your children. Don't assume that you'll be there with them forever. We pray that you live into your 90s, into hundreds. But remember that if you were to exit today, how would that family continue? Who's going to protect them? Who's going to be the guardian? You need to look at that, plan for that. Number three, that you can use life insurance or is debt settlement. So, for example, maybe you have a mortgage going and you still have a mortgage outstanding. If you don't have a life insurance, suddenly your children or your spouse may have to be responsible, for the payment of the mortgage. But if there's no money to do it, unfortunately, if you miss first, second month, nobody's going to be they will have to repossess the house. Unfortunately, it does not matter how much you have paid, right? You've paid down payments, you've paid your mortgage for up to 15 years, and you have just 10 years to go. If you pass away and you don't have the money to clear the debt, unfortunately, that house will be repossessed. So life insurance is used for this, to make sure that your debt is cleared and your children will be able to live in a mortgage-free house, or your spouse also will be able to. Number four, funeral expenses. People assume that when you die in the UK or anywhere in the world, that it is free. In the UK, it is not free to die. In fact, a lot of people cannot afford to die because you're looking at a bill of almost £10,000 in funeral costs. The question is, do you have that saved up somewhere? All right. Your life insurance can provide immediate cash for your children if you were to pass away. Right. And number five, it's a legacy protection. So all these years you've been building, maybe you've been building, a portfolio of maybe shares, of properties and all of that. Remember that when you pass away, or if your spouse passes away, there are inheritance tax liabilities that could be incurred, especially if your estate is over £325,000. So when anybody passes away in the UK, all that you have is going to be added together, and then a bill of 40% will be sent to your family. The question is, if that happens to you today, if you exit today, right, will your family be able to afford the inheritance that you built for them, or the wealth that you built for them? So life insurance is also used creatively to be able to do this, to make sure that there's lump sum money available to be able to pay the financial liability that may come from your family taking over your estate. These are really important. So let's go over that. Five ways in which you can use life insurance to provide a safety net for your children. One, it provides income replacement. So they get they get income, right? Because it's one thing to be there with them. Aside from having to go through the trauma of emotional loss, the financial implication of a parent being absent in a child's life, oh my goodness, it is huge. So don't be selfish by saying, oh, you know what, if I pass away, my children will take care of themselves. It is a responsible thing for you to do, to have financial safety net. So if I was going to give a typical example that, okay, so if you're going to be climbing a height of about 40 feet, which would you prefer? To have something below that, in case anything happens to you, that you fall, there's someone to catch you, or the one that does not have any net at all? Anytime, any day, all my clients say, yes, I'll prefer to have a net on that. So why would you live a risky life? Life is risky, We have two important dates: date of birth, date of death. Date of birth, everybody knows it. Date of death, nobody knows it. The question is, what's the financial safety net that you're built off for your children if you were to pass away today? Right? Nobody wants to talk about life insurance. Nobody wants to talk about death, but we are all going to die one day. We really pray that we live into our old age and everything. But even if all you're doing is protecting to retirement, it's fine, right? If you outlive retirement age that your life insurance may be, what is the plan for the financial outlay to be able to pay off the inheritance tax liability that may come on the estate that you're building? So we also have what we call all of life. And so what I want you to do is whoever shared this video with you, have a conversation, and they will be able to tell you, okay, look at your different situation and be able to advise. So all of our advice will be able to advise you on the sort of amount that you need to have in place. But this is what I always say to my client, that once you go through the financial consultation with you, you may not be able to afford to do everything that you require. However, there's always a good place to start because you can build up. Let me take for example. So for one of my clients, we were going through the calculations of what financial outlay that may be needed to support his family if he were to exit. By the time we got, it was about maybe £1 million in life insurance, and some income protection and all of that. By the time we came up with the premiums that will be paid, it was coming up to about maybe £350. As at that period, he couldn't have been able to afford that. So what we just did was to graduate to what he could afford, right? So I think we started with about £250,000 in life insurance and did some income protection, did some critical illness cover. We did a bit of private medical insurance too, right? He couldn't take the family package then, but we're able to have, but as time went on, within the next 12 months, we're able to build up the life insurance to about £1 million, because then he had some other income sources that came in and it was affordable for him. So what I say is, it is okay for you to have a conversation with one of our advisors, right? So have a conversation and we will take you to what you should have, it will be, so our goal is to educate you to make informed decisions, okay? So you go through that and then you're able to determine what you should have in place. And then whatever, if you, maybe you're working this, you already have a life insurance, that's fantastic. We'll be able to review it for you and see if it's still relevant to your situation, because our lifestyle, our life is not static, all right? So that's why annually we want you to have a look at what you've got and I'll help you to review it. So if you're watching this, you have one. And if you're also watching this video and you don't have your life insurance in trust, I'll say you need to speak to us. Why? Because there will be inheritance tax liability that may be on it. Why would you not want to have something that we can do for you for free that can protect your family from paying extra 40% on that payout? So why pay taxes on it if you can have it for free, if you have it in trust? So we'll also help all our clients set up their trust, and we do not charge for this. Absolutely free of charge, to help you set this up. So speak to one of our advisors and then we'll be able to help you. So it is high time. I'll say, don't be selfish. And your children did not ask you to bring them into the world. So I decided to have my children, and I thank God I do have them. So it is my responsibility as a woman, as a parent. It is my husband's responsibility as a father, as a parent, to make sure that we're financially provided for if either of us were to exit, or if both of us exit at the same time. Life happens, right? I've seen it a particular family that it was both the mom and dad that died, and they were so, so young. Life was not easy because suddenly they had to be shared amidst, different aunties and uncles. Folks, it is never, never an easy thing to exit, when your children are young. But it makes it even better if there's money to be able to help them to go through that. So I'll say it's high time. Happy Children's Day was small. Speak to one of our advisors and we'll be able to help you to put the right thing in place. This is over an hour. This is Olotu-oke again. Remember, every single conversation you have with us matters, because you never know. You just never know. And yeah, have a good one.